You want to grow your business and you are thinking of taking a business loan, but many business owners take loans that end up stressing them and hurting the cash flow. Therefore, you must know what to check before taking a business loan. I work with Money Point Microfinance Bank and I facilitate business loans, and I know exactly why others succeed with business loans and why others fail with business loans. I will start with one of the most important things you need to know before you take a business loan: the purpose of the loan. That's number one, the purpose of the loan. Every borrowed naira must drive growth. Before taking a business loan, you must know clearly why you are taking a business loan, and you must know clearly what you want to use the business loan for. A loan should either increase sales, increase production, or improve efficiency that leads to increased income. Using loan to only manage the business without growth usually mounts pressure on the cash flow later. If, for instance, you borrow 500,000 naira to buy stock that you already know that you sell fast, and that 500,000 naira can turn into maybe 1.5 million naira within 2 months, that loan has a clear purpose, which is it generates revenue. But if you take the same 500,000 naira just to grow a business with no specific purpose, maybe spending on branding or other purposes, I don't know when and how that branding or whatever you are doing is going to bring back some form of income in the business. The loan may not improve your cash flow and may later turn to a burden. Before taking a loan, always define a specific purpose that you want to use that money for. If there is no specific purpose to use that money for, please don't take it. And this purpose must be to generate more income. A loan is supposed to pay for itself. Number two thing you should know before taking a business loan is you must have the ability to repay that loan. Your cash flow is supposed to cover your loan repayment. Many businesses only focus on getting a loan approved, but they don't consider the fact that if their cash flow can comfortably handle the loan repayment without issues. Your business must be able to pay the loan, run daily expenses, and also survive slow period. Very important. If your business makes 40,000 naira, for instance, in a month, but your loan repayment is maybe 50,000 naira or 60,000 naira every month, you will struggle immediately. You start choosing between paying off that loan, restocking goods, and paying rent or staff. You will have to, start struggling between this, and this is how loan quietly damages businesses. It is not your hope or your optimism, but your cash flow must be strong enough to comfortably cover the loan repayment before you should decide to take a loan. Number three factor you must consider before taking a loan is the interest rate and other hidden charges. If there is any, you must understand the real cost of the loan you are taking. The interest rate you often hear is not always the full story or the full cost of that business loan. The real cost of a business loan includes the interest rate, the management fee, the penalty charges. For instance, loan A or loan B says I'm charging 10%. Loan A says on reducing balance method, while loan B says on fixed method. These are two different things entirely. The reducing balance is normally cheaper because as you pay, the interest reduces and the repayment amount also reduces. But then the fixed 10%, for instance, that I give an example, will be flat throughout the loan tenure. So the reducing balance is definitely cheaper. So these are the things you must know. You also need to ask, what are the processing fee? That's the management fee. You also need to ask, are there penalties for late payments? Is insurance deducted upfront? Never focus on the interest rate. Look at the totality of the loan, the cost of the loan, before you accept to take it. Number four factor you must consider before taking a business loan is your loan tenure versus your business cycle or your business earning cycle. Timing matters a lot. Your repayment plan or your repayment schedule must match how your business earns money. Even profitable businesses fail when repayments are due before income comes in. For instance, a farmer may earn income only after he or she harvests in 3 to 4 months' time. Weekly repayment plan during planting season creates pressure to such a business person. Or maybe a fashion designer, he earns so much income during festive seasons like Christmas, Salah, and what have you. But then during off seasons or off period, they struggle to survive. Weekly repayment during this period may strain the cash flow. A business loan should follow your earning cycle but not fight against it. Number 5, you must have a backup plan. Prepare for when things go wrong. No matter how your plan is good, no matter how you pray, no matter how you consult all the oracles and whatever you do, business is always unpredictable. I'm not saying prayer is bad, of course, but then business is often unpredictable. You must think about what happens when sales drops, or when suppliers delay supply your goods, or expenses increase unexpectedly. For instance, now that the fuel prices in Japan have increased, what will you do? Nobody prepared for this. It just happened. If you borrow, for instance, 300,000 naira and your supplier delays supplies, definitely your sales drop. If you have a safe forecast of maybe 5,000 units and your supplier is delayed, then maybe you end up selling 3,000 units of your product. Without a backup plan or an emergency fund set aside, you may end up not be able to pay this loan as at when due. So you must always leave room for errors and for unexpected occurrences. A good loan should not destroy your business because of one bad month. You should prepare for that. Then here is a recap. A business loan is very good, but only when the purpose is very, very clear, your cash flow is strong enough to support repayment, the real cost of that loan is understood. Very important. Repayment matches your earning cycle. If you have a backup plan, business fail not because they take loan, they fail because they take loan without proper planning. So thank you very much for watching. Please like, subscribe and share to your loved ones, and please let me know which of these best resonate with you. Share your experience in the comment below. Let me hear your experience. Thank you very much, and please don't forget to watch our next video here. Thank you and have a good one. Bye.